China is already the world's largest trading nation and the second largest economy. And in the next few years, analysts say it's likely to emerge as the world's largest creditor. A new study finds China now has a bigger presence in international development finance than all of the world's 6 major financial institutions put together. The Chinese Development Bank and the Export-Import Bank of China loaned an estimated $684 billion globally in 2014. We begin our coverage now with CCTV's Yang Zhao from Beijing. And Zhao, it's unusual for a developing country to become a major investor, but that's exactly what China has accomplished. Is this all part of China's Go Global strategy?
Well, Alan, the Go Global policy was introduced 20 years ago. It was primarily a policy aimed at encouraging better exports, but gradually evolved into the strategic plan to export not only Chinese-made products, but also capital, technology, talents, and labor forces. In fact, China's outbound investment surpassed domestic investment for the first time in 2014. And 2 banks that you mentioned, the Chinese Development Bank and the Import-Export Bank of China, are the 2 main institutions of China's export finance infrastructure. Increasingly, direct loans has been seen in recent years to support foreign projects, especially to countries involved with the Belt and Road Initiative. The Silk Road Fund and AIIB have just started operations, and both will pump more money into the market. The result of that is, of course, more outbound investment. The Chinese Commerce Ministry has said that compared to last year, China's non-financial outbound direct investment rose 62% in the January to May period to 480 billion yuan or 73 billion US dollars. The majority of investment is in energy, transportation, and technology. And more evidence to prove this trend is China selling off the U.S. government debt it holds. Though China is still the largest foreign holder of U.S. treasuries now, its holding is experiencing a decline. In May 2015, after 6 consecutive months of selling, China was actually the number 2 holder. That means China has changed their policy on how to use large foreign reserves and move them into other areas which yield higher returns.
Now, Zhao, China and the United States have been negotiating a bilateral investment treaty. What's the latest on that?
Well, representatives from both sides just concluded the 8th China-U.S. Strategic and Economic Dialogue in Beijing last week. They agreed to exchange new negative list offers this week. There will be the 3rd negative list. The last time the 2 sides exchanged the list was in early September last year, days ahead of the Chinese President Xi Jinping's state visit to the United States. The list is the key part of the bilateral investment treaty between China and the U.S. to prevent firms from investing in critical sectors. Neither side wants companies with key technologies to leak knowledge to the foreign country or edge out domestic firms. That's where the negative list comes in. The focus of negotiations has been to keep the list as short as possible. So both sides are very, very cautious about each and every item that is on that list. That's why the negotiation process is so slow. There have now been 24 rounds of the talks in the last 8 years. China has been the United States' biggest trading partner since 2015, with a total trade volume of 55.8 billion US dollars. Both sides wish to agree on a deal before President Obama leaves their office.
Okay, thanks, Zhao. That's CCTV's Yang Zhao reporting from Beijing. Joining us now in our Washington, D.C. studio is David Dollar. He's a senior fellow at the Brookings Institution and the author of China as a Global Investor. From Sao Paulo, we're joined by Charles Tang. He's the chairman of the Brazil-China Chamber of Commerce and Industry. And here in Washington is Yukon Huang. He's a senior associate in the Carnegie Asia program. Welcome to all of you. David, let me start with you. Lots of things happening in the Chinese economy. Growth predicted to be around 6%, but the economy is also transitioning from one based on manufacturing exports to one based on domestic consumption. But by the year 2020, China's going to be the world's largest investor. How significant is that?
It's a very big change for the world. China has been investing abroad for a while. Some of this has come on gradually. But in the last couple of years, the scale of China's outward investment has really become quite tremendous. And so I'm projecting that by 2020, China will be the largest net investor in the world. Net is an important adjective there. The U.S. is still the biggest investor in the world, but because there's so much inward investment into the U.S. and purchasing of U.S. treasuries as reserves, the U.S. is a net debtor. But China will be the largest net creditor in the world, and it's providing a lot of different types of financing. Most of that's quite welcome. And particularly countries are very open to direct investment when Chinese firms come in and open factories or buy up existing factories. So this is pretty important phenomenon in the world.
So Yukon, China becomes the world's biggest net investor, as David has been pointing out. Does that change the status quo in terms of which country is generating the most world investment?
Well, you go back for the last 10 or 20 years, China was either the number one or number two in receiving money from abroad. Its foreign outward flows have only surfaced in the last 7 to 8 years. It's getting very, very big, as David has mentioned. It's going to a very wide geographic mix of countries: Africa, Latin America, Europe, Asia, and the United States, and for a variety of different purposes, whether it's commodities, energy, or to support trade. And I just want to mention trade, because here's, of course, China's real strengths, both in terms of its ability to exports and the fact that it imports a lot of commodities and imports a lot of components from a wide variety of sources, and is now trying to further that chain. And I think this is going to have a very significant impact on many countries throughout the world.
Right, you mentioned all those places where Chinese investment is going. One of the biggest recipients of Chinese investment is Brazil. Let's go to Charles Tang in Sao Paulo for some information on that. Charles, the Chinese Premier Li Keqiang announced investment deals in Brazil worth $50 billion. And among the new investments, we'll see a new metro being built in Rio de Janeiro, other infrastructure projects. How significant is this investment for Brazil?
Well, it's very significant, especially now where the Brazilian economy, it has slowed down tremendously because of the political uncertainties. The fact that China is still investing strongly into Brazil sends a very strong message that, Brazil is a wealthy country. Temporarily, it has political problems, which has generated economic problems. But now all the assets are very cheap because of this situation. And the Chinese companies, thinking strategically, are investing in a massive way. We're looking at power plants. We're looking at hydroelectric power plants. We're looking at shipyards for the petroleum and gas industry, etc. And all the transmission lines from the Belo Monte to the southeast is being done by State Grid. So I think that the Chinese have the right perception that right now it's the best time to invest in Brazil. And really, because of all the Chinese investments in all of Latin America and in the Caribbean, I wrote an article for the World Policy Institute of New York where I alluded to the fact that America's backyard is building a Chinese garden, is growing a Chinese garden.
David, what does all this investment tell us about the state of China's economy?
Well, it says both good and bad things about China's economy. China has a very high savings rate. They've invested that primarily at home through most of the recent decades. But now their investment opportunities are diminishing. They've built up a lot of excess capacity. Real estate is most obvious, lots of empty apartments, whole empty cities. But manufacturing has excess capacity and declining profitability. So part of this exodus of capital from China reflects diminishing opportunities back at home, and that reflects some weaknesses in the Chinese economy.
Yukon, the Chinese-led Asia Infrastructure and Investment Bank, they will announce their first loans later this month. And according to China Daily newspaper, these investments will include solely financed projects and those co-financed with the World Bank, as well as the Asian Development Bank. How does this kind of investment fit in with China's very ambitious, broader One Belt, One Road plan?
I see these as always complementary. AIIB is designed to focus on infrastructure. In the future, they might go into other areas. But you also have funds which are going to go support the private sector. You have direct lending from the China Development Bank or the Export-Import Bank. And they're going into many infrastructure projects in South Asia, the Middle East, all the way through to Europe. Central Asia is getting a lot of attention. AIIB plays one important critical role, and it plays a critical role because it's basically a multilateral agency. So it's going to have different kinds of approaches and standards. And I see this as complementing the funds that flow through what I would call the Chinese bilateral programs.
And Charles, Brazil at the moment is facing its worst recession in 2 decades. You've got something like 11 million people unemployed. How do these Chinese investments help Brazil?
Well, by creating jobs, by bringing in much needed capital. We can just take a look at Africa, where the former colonial masters of Africa stripped the continent of its wealth and left it as a lost continent for many decades until China started investing massively into Africa. And now it has transformed the continent into a continent of hope. The fastest growing countries in the world are African nations, where China invested hugely in the last 6 years. You can see the growth rates. And in Brazil, and all over Latin America, much needed investment is being made by China. And with regard to Chinese economy, I personally am not pessimistic, because when they talk about the massive non-performing loans by the local governments, we must remember that China, by and large, except for 3 trial projects in Beijing, Guangzhou, and Shanghai, does not have property tax. If all the local governments start charging 1% property tax, they can probably repay the banks 10 times. And the present Brazilian government, I just had lunch with the chief minister of Brazil, of the interim government that replaced President Dilma Rousseff. And what they want to do with Brazil makes a lot of sense, by reducing costs, by selling off all the assets. Chinese state-owned companies, some of them are quite profitable, and a lot of them can become problems, non-performing loan problems for the banks. But if they hold very, very valuable assets around the world, if they sell those assets, they can probably repay their bank loans twice. So I'm not so pessimistic. I believe that China will continue to grow in a solid way. Of course, no longer in double digits, but 6-7% is just very good.